This presentation is about federal filing status. I want to preface my discussion of filing status and dependency by saying that when you establish taxpayer filing status and dependency, this can be complex. It can also be very simple. For instance, if you have an elderly couple sitting before you that is married and they say they want to file jointly, there's nothing more that needs to be done. It's married filing jointly. But that's really about the only part of filing status that is actually very simple. The rest of it can be complex. So you must not rely on your memory when making such determinations. You must use the reference materials provided to you in order to make the correct determination. No one expects you to remember all the details that we are about to discuss. We are in the business of looking things up. 5 filing statuses in the federal tax code: single, married filing jointly, married filing separately, head of household, and qualified widow or widower. Tax-Aide counselors are responsible for determining the filing status for a taxpayer. We're not, we certainly don't want the taxpayer to tell us what their filing status is, other than maybe telling us that they want to file jointly as a couple. But apart from that, we don't want taxpayers to tell us that they're head of household, because they don't really know what head of household means from a tax perspective. Yes, they understand that they feel like they're the head of their household, but that is different than the actual filing status. So we need to look for the filing status that's most advantageous to the taxpayer, the one that's legally allowable, and we have our qualifying child or relative resource tool that you should all have at this point. You also have it electronically in the self-study folder under federal resources. Counselors are not expected to remember filing status details, as I mentioned earlier. So you really need to look these things up and make sure that you have the right filing status, and not be influenced so much by the taxpayer trying to tell you that they're head of household, for instance. Filing status is critical, and it impacts credits, including earned income credit. It also impacts the amount of their tax liability and the deductions allowed. So it's very important that we get it right. To take the importance of filing status a little bit further, there are many tax items affected by filing status. First of all, the necessity to file a tax return. If you look at Pub 4012, the Volunteer Resource Guide, Tab A, Chart A, you'll see that filing status plays a role there in their necessity to actually file in the first place. The standard deduction is influenced by filing status, and then you can look at the Volunteer Resource Guide 4012, Tab F, to look into more detail on that. Your tax rate bracket as a taxpayer is influenced by your filing status. Your eligibility for certain credits, for example, the EIC, Earned Income Credit, if you look at Tab I of the 4012, your general eligibility rules, step number 3. So if you look at those things, they all depend heavily on having the correct filing status determined. On this slide, you can see that the tax rate depends heavily on the filing status. So on this chart, you can see that single, there's a tax rate of 10% on the first $9,950, and then after that, the tax rate jumps up to 12% for $9,951 through $40,525. But married filing jointly, their tax rate is different. So their first $19,900 is taxed at 10%, and then, which is, by the way, twice what the single person pays in tax rate. And then anything over $19,901 up to $81,050 is taxed at 12%. So that's essentially double the single filing status. Married filing separately is treated just as single is treated. Same numbers. And the head of household has its own bracket so that the first 10%, the first $14,200 is taxed at 10%, and then from 14,201 to 54,200 is taxed at 12%. And the qualified widow or widower, they would use the married filing jointly tax rates. So there are a number of things that need to be considered when determining a taxpayer's filing status. Essentially, all of the things that revolve around their living situation. So some of the questions you need to consider are what's the marital status as of December 31st for the taxpayer? Are any individuals living in the home with the taxpayer? Is the taxpayer providing over half the support of any individuals living in the home? Is the taxpayer providing over half the cost of maintaining the home for any qualified individuals that may live in the home, which would qualify them for the head of household filing status? Is the spouse deceased? What's the date of death? Any qualifying children living in the home? So you really need to get these questions answered, and the best way to do that is to use the resource tool that we've provided to you, because as you go through the flow chart on page 8 for filing status, you'll be asking all of those questions. So as you get the answers, it determines where you go down the flow chart and determines where you're going to end up as far as a filing status. Obviously, marital status is very important to determine a taxpayer's filing status. But the marital status is determined on December 31st. So some people do get married on December 31st just so that they can have the tax advantage of being married for the entire year. So it's really only on that one day. If somebody gets married on the 31st, they're considered married for the entire year. The federal definition of married is what we're looking for. So when we're trying to determine if somebody's marital status is married, it's really the federal definition. And that is that the legal marriage under the laws of the state or country in which they got married in the first place. So if they got married under that state or that country's laws that indicate that they are legally wed, then that's what we use for tax purposes. It does not, however, include civil unions or registered domestic partnerships. And then also, there are some states that have common law marriages, such as Rhode Island and New Hampshire. Massachusetts does not have common law. So somebody could be married under common law in some other state other than Massachusetts. So, but we really rely on the taxpayer to tell us what their marital status is. We don't ask them for proof. We're not looking for marriage certificates or anything like that. So when we ask them if they're married and they say that they are, that's all that we really need. Everyone that goes to your site to have their taxes prepared fills out an intake booklet, an 8-page intake booklet. And the first 3 pages are federal information that is essential in order to do their tax return. So if you look at this slide, it's indicating that there's part 2, marital status and household information. And the intake booklet is designed not to ask them questions that would presume that they understand tax law. So it asks them more basic questions like, were they ever married? Are they married now? Are they divorced? Are they legally separated? Widowed? So things that make sense to the common person. The intake booklet is written to get answers to questions in very simple terms. And then we as counselors can then convert that information into tax law as far as determining their filing status. So also, if you notice this gray area to the bottom right of section 2 of part 2, notice it says to be completed by certified volunteer preparer. So when the taxpayer fills out the intake booklet, that gray area should not be filled out by the taxpayer. That's filled out by a trained counselor to help determine whether they have legitimate dependents or not, because we're really asking them. It says under number 2, list the names below of everyone who lived with you last year other than your spouse. Anyone you supported but did not live with you last year. So we're asking people, tell us who lives with you, and we'll determine whether they're dependents or not. So that's part 2, and filing status is the first part of part 2, and dependency is the second part. This is the decision tree that appears on page 8 of your resource tool that helps you to determine the filing status for a taxpayer. You also can go to publication 4012, tab B as in Brian, B as in Brian 9, and you can essentially do the same thing using the 4012. So you can determine filing status either using the resource tool or the 4012 manual. But what's important here, and what's also important with dependency, don't ignore the footnotes. As you go through this flowchart, you really can't see it very well on this slide, but there are places where there are superscripts, like a little number 1 or a little number 2, a little number 3. So as you go through the flowchart, when you see one of these superscripts, you need to go down to the bottom of that page and look up what number 1 is, or what number 2 is, or what number 3 is. And you need to read that carefully, because you can easily make a mistake and make the wrong filing status determination because you did not read the footnote. So the footnote's extremely important, and we have to really stress that point. You have to read those footnotes, otherwise you'll get it wrong. With head of household filing status, you may be faced, the taxpayer may be faced with having to determine whether they paid over half the cost of maintaining a home. And so in publication 4012, Volunteer Resource Guide, tab B, you will actually have a little worksheet where you can determine the cost of keeping up the home. But there was also a ruling, if you notice on this slide, you can use the value of housing and apply the new rule to open years. So if you'd rather not determine how much you paid in property taxes, how much for mortgage interest expenses and rent and utility charges, apparently there was a judgment at some point that said you can use the fair rental market value of your residence. So if you know that other homes like yours are renting for X number of dollars per month, you can actually use that and save yourself the aggravation of having to add up all of those other figures. In some cases, you may not feel comfortable that the resource tool that we've provided to you necessarily gave you the correct answer. You might want to verify by using some other sources. And here are some IRS sources. The first one being the IRS Interactive Tax Assistant. You can go to irs.gov and you can use the ITA Interactive Tax Assistant and can determine filing status using that. Also, there's frequently asked questions on irs.gov related to filing status, and you can use also the publication 4491 training manual and look up filing status in there. So you have various ways of confirming what you've determined by using the resource tool if you feel more comfortable using two sources rather than just one. So now let's talk about the 5 filing statuses independently of each other and see what the qualifications for each one are. On single filing status, the first point here is that a person cannot be married as of December 31st of that tax year in order to claim single. But somebody could be married but legally separated and still use the single filing status. But what's important to know here is that they have to be legally separated. There has to be a decree or a document from the court that indicates that they are legally separated. So we don't need to see the document ourselves as counselors, but we need to be sure that they have such a document, that they did go to court and the determination was made that they were legally separated. But there may be more advantageous filing statuses that could be used rather than single. So we should explore those things and see whether perhaps they would qualify for head of household or qualified widow or widower. So we need to ask the taxpayer whether they have any qualifying individuals living in their home, whether the taxpayer paid over half the cost of maintaining the home, that is the home of one of their blood relatives. Taxpayers are recently widowed, so maybe they qualify for a qualified widow or widower. Married filing jointly. This is generally considered the most advantageous filing status of all of them. In order to qualify, in order for a couple to qualify as married filing jointly, they need to be considered married on the last day of the year, December 31st. And they need to be considered legally married under whatever state laws applied to them when they were married in the first place. So wherever they were married, if they were legally married in that state, then they're legally married federally. We have a couple of common law states here in New England, Rhode Island, New Hampshire specifically. They're both common law states. So some people can be considered married because they fall under common law and because they've been together, because they've been a couple for long enough that they qualify under the state laws. If a spouse died during the current year and the taxpayer has not remarried, then the taxpayer that's still alive has the ability to file jointly for that 1 year, the year that the spouse passed away. There are other situations as well. A married couple that live apart but are not legally separated or divorced. Couples that live together in recognized common law marriage states, which I already discussed. Separated but divorce decree not final. So a couple could be separated, but the divorce decree is not final, so they're still considered married. And that just about does it for married filing jointly. Is married filing separately. Married couples that file separately have to be considered married on the last day of the year, as it would be with married filing jointly. Includes common law marriages as well, just like married filing jointly. Each spouse files their own separate tax return. Spouse's name and social security number must be entered on their return. So if you file a married filing separate return, you need to put your spouse's social security number and name on that tax return as well. And oftentimes what I've found is that people that have separated oftentimes don't know their spouse's social security number. In some cases, they're still on speaking terms and they are able to get that. But in many cases, they're not on speaking terms, and so they basically do not have their spouse's social security number. So if the social security number is unknown in our software, TaxSlayer, you can enter a social security number of 111001111, and that allows you to continue in TaxSlayer. However, the tax return will have to be mailed in USPS and will not be able to be e-filed. What are some of the disadvantages of married filing separate tax returns? Well, first of all, the highest tax rate and lower standard deduction. So the IRS has done quite a bit to dissuade people from using married filing separately. So there are not a whole lot of advantages to doing it, but there are an awful lot of disadvantages. So it is the highest tax rate amongst all the other filing statuses, and it's the lowest standard deduction. 85% of Social Security benefits are taxable if the taxpayer lived with the spouse at any time during the year. So another reason not to use married filing separate. Most tax credits are not allowed. So you will find if you look, once you get into the learning about credits, you'll find that many of the credits are disallowed for people that filed MFS. You cannot deduct student loan interest. Uh, I had a client who had a huge student loan payment and in the course of a year paid lots of student loan interest, but because her husband had his own business and was behind on his taxes and hadn't paid for a number of years, she had to file separately. Otherwise, she would have gotten caught up in his debt to the IRS. So she had to file separately and lost out on her student loan interest deduction, which was about $1,000. And at the end of the list here, you cannot use use the standard deduction, which was 12,500 for tax year 2021, if your spouse itemized. So here's the catch. If your spouse itemizes, and this is what happens with couples that split up, usually one of them still has the house. And the house, of course, gives them a lot of deductions that they can put on there, that they can itemize. Mortgage interest, real estate taxes, all of those things can be itemized. So one spouse is going to itemize all the deductions, which means the other spouse filing a separate return has to itemize as well. But the other spouse doesn't really have any deductions to put on their itemized deductions. So their itemized deductions end up being zero or some minuscule amount. And so they end up getting whacked with taxes because they don't have a decent deduction. So it's not a lot of good reasons to file married filing separate. Why do some married couples choose to file separately? Well, because perhaps they just want to keep their finances separate. I have a client that filed jointly, but their lives were so complicated, and one of them had a much more complicated life with a lot of rental property than the other. And so in the final analysis, they decided to split up their tax returns and do them separately because one had a much more straightforward tax return, but the other had a very complex one. So it just ended up being better to have them file separately. And they really, because they didn't qualify for any credits anyway, they really didn't lose a whole lot by doing it. The spouse has already filed MFS. Well, okay, couples that have split up do find that the other spouse has already filed MFS or has filed head of household. And so the remaining spouse who hasn't filed yet ends up having to file married filing separate because they don't really have a choice. Married but separated and not filing MFJ. So the couple has split up and they have chosen to file separately for that reason. But here's probably the biggest one, and this is the one I referred to in the last slide. There's no liability for the spouse's tax obligations. So if one spouse has a small business and has been not paying their taxes, or they're behind on their taxes, the other spouse typically doesn't want to be involved in that obligation, so they file separately for that reason. A couple of other reasons why a married couple might want to file separately. Sometimes you will find that the married couple actually has a lower combined tax when they file separately. It doesn't happen often, but it does sometimes happen. So especially if they have uh, health insurance through the ACA, which often called Obamacare as well, they may have a lower repayment of the advanced premium tax credits that they received for their health insurance. So they may have to pay back less if they file separately. And sometimes there's a lower combined tax because one spouse has high medical expenses, and those high medical expenses end up benefiting that one spouse more than they would benefit, more than the expenses would benefit the couple as on a joint return. Refund is not offset by spouse's outstanding tax or other debts. So one of the spouses may in fact qualify for a refund, yet the other spouse has a significant balance due at the end. Well, the one spouse with the refund would like very much to get their refund and not have to sacrifice their refund because their other spouse owes money. So if they file separately, the one spouse with the refund gets the refund and the other spouse ends up paying. So that's about it on reasons to actually file separately. Now we move on to head of household. Head of household, we want to talk about the unmarried head of household and then the married head of household. So the definition of head of household is a taxpayer that provided over half the cost of maintaining their home, which was also the home for qualified individuals, whether they be dependents or non-dependents. So dependents would include dependent parents possibly that are not living with the taxpayer. So uh, parents can be dependents uh, even if they live, for instance, in a nursing home or assisted living or that kind of thing. A parent can still be a dependent, but that's really the only situation where a dependent can be living somewhere else. It's only the parent of the taxpayer that qualifies under those rules. Non-dependents that lived with the taxpayer during the year. So you may have other people that are not dependents. They're called qualifying relatives, and we'll get into that when we talk about dependency. But non-dependents that lived with the taxpayer during the year, but it has to be at least 6 months during the year. And you can also look this up on publication 4012 Volunteer Resource Guide, tab C. And then we have head of household when two people are married. The taxpayers must have lived apart for the last 6 months of the year. So they cannot have lived with each other over the last 6 months of the year. They need to file separate returns, and they need to have provided over half the cost of maintaining a home for a dependent child, stepchild, or eligible foster child for over 6 months. Now, in this case, with married people, there are no other relatives that qualify. It's only the dependent child, stepchild, or eligible foster child. Special rules apply for divorced and separated parents. Again, 4012 tab C. What are some of the advantages to filing head of household? Well, you have the higher standard deduction than single or MFS. So a higher standard deduction, that's an incentive right there. And you have an advantageous tax rate structure. So the tax rate is better on head of household than it is on the other filing statuses. Higher phase out thresholds for some credits. And you may ask, well, what in the world is a phase out threshold? Well, generally for credits, the taxpayers qualify for credits if their income is within a certain range. But if a taxpayer has income that's extremely high, or sometimes not even extremely, if it's just above a certain threshold, they no longer qualify for a particular credit, or they may be in what's called a phase-out range, where they qualify for the credit, but they don't qualify for all of the credit because they're in that phase-out range. And then when they get to the top of the phase-out range, their income is at the top of the phase-out range, they're completely phased out. They don't get it at all. So that's how phase-out works. And you can see that head of household has higher phase-out ranges, higher phase-out thresholds than single or married filing separate. Education credits are available when filing head of household, but they're not available when filing MFS. So head of household gives the taxpayer the ability to use education credits, which can be very beneficial. Education credits can amount to quite a lot of money. So if you can possibly qualify for education credits, you should, and by filing MFS, you wouldn't. The last filing status is qualifying widow or widower. It starts by making sure that the couple was entitled to claim married filing jointly in the year of death. So if they were unable to file married filing jointly in the year of the death, then they would not be able to use this qualifying widow or widower filing status. Secondly, they must have a dependent child living in the home all year, and a grandchild does not qualify them. So it must be a blood relative, must be a dependent child living in the home all year. They must have paid over half the cost of keeping up that home for that dependent child. Qualified widow or widower filing status is eligible for 2 years following the year of death. So typically in the year of death, a couple would file a married filing joint return even though one of the spouses had died. And then if there is a child in the home at that point, the remaining spouse that's still alive could claim qualifying widow or widower for the following 2 years after the year of death. And this filing status is eligible for 2 years after, and the advantages are that there's a standard deduction, the same as married filing jointly. So this is a very good standard deduction for a person who is essentially only filing a tax return for themselves because their spouse has passed away. They still get the full married filing jointly standard deduction. So it puts them in a good position for a couple of years. And they also pay married filing jointly tax rates as well. Just to elaborate a little bit on the dependent child in this qualified widower situation, the child must be a dependent, or the child would have been a dependent except that the child had gross income above the threshold amount, or the child filed a married filing jointly tax return. Taxpayer is a dependent of someone else. So if the taxpayer is a dependent of someone else, then they, by law, cannot have a dependent child. So that would exclude them from being able to use qualified widow or widower. A little note here about filing status within TaxSlayer when you're actually doing tax returns using TaxSlayer. You have to be aware that changing the filing status while you're doing a TaxSlayer tax return deletes the existing Massachusetts tax return. So if you do change the filing status, the Massachusetts tax return is going to disappear and you're going to have to recreate it. So that's just a little heads up on what happens when you change filing status in the software. Let's look at a couple of scenarios and actually go through the process of determining filing status using the resource tool, the qualifying child, qualifying relative resource tool that you all have. So here's the first scenario. Mr. Buck provides total support for his 2 young children. His wife died in 2018 and he has not remarried. What is the best filing status for Mr. Buck? So if we go to the next slide. So here we have the decision tree so that we can determine what the best filing status is. And normally we start from the top. I just wanted to point out though that all of these red numbers are nothing more than box numbers. So box 1 has a 1, box 2 has a red 2, box 3 has a red 3. So those are only box numbers. Those are not to be confused with the superscripts that point to the footnotes. So you'll see inside some of the boxes, they'll have a little number superscript up at the top of number 2 or number 1, number 3. Those point to footnotes. So you go to the bottom of the page 8 in your resource tool and you look up the footnote and you read through and make sure that the footnote doesn't have any impact on your decision. So if we start at the top, were you married on the last day of the year? And the answer is no. Did your spouse die during the year? The answer is also no. And then we get into the next box. Do all of the following apply? And it needs to be all of the following. So there are 4 bullets and all 4 would need to apply. Well, right off the bat, the first one is a problem. Your spouse died in one of the 2 years prior to the tax year. No, that's not true because the spouse died in 2018 and this is now 2021. So immediately we see that all of the following do not apply. So we make that box a no, and we don't really have to read any further as far as those 4 bullets. So we go down to the bottom box. Do both of the following apply? You paid more than half the cost of keeping up your home for the required period of time. You have a qualifying person for head of household as defined in the accompanying charts. And the accompanying charts are in the resource tool as far as a qualifying child or qualifying relative. So we'll get into those when we get into dependency, but that the person does qualify the taxpayer as head of household. So the best choice that they can make is head of household. Now, what if his wife died in 2019, tax year 2019? So again, we start at the top. Were you married on the last day of the year? Answer is no. Did your spouse die during the year? Answer is no. And then we go down to the larger block that has the 4 bullets. Your spouse died in one or of 2 years prior to the tax year, and you did not remarry before the end of the tax year. Well, that's true, but it needs to be everything in all 4 bullets need to be true. So the first one is true. In the year of death, you were entitled to file a joint return with your spouse. That's also true. Bullet number 3, you paid more than half the cost of keeping up your home for the required period of time. That's also true. That's 3 bullets out of 4. Here's the 4th one. Your child or stepchild who was your dependent or could have been your dependent lived in your home all year. A foster child or grandchild does not meet this test. So that's also true. So the answer is yes, and qualifying widow or widower would be the filing status that he could use if the death was in 2019 rather than 2018. Scenario number 2 for filing status. Jane is 69 years old, whose husband died July 1st of the current tax year. She had a $20,000 pension and a $15,000 Social Security income during the year. Jane's 10-year-old grandson lived with her all year and is her dependent. Jane provided all the cost of maintaining the home for her grandson for the entire year. Jane's most advantageous filing status. Well, this one's pretty easy. So when you start from the top, were you married on the last day of the year? The answer is no. Second box is, did your spouse die during the year? The answer is yes. So immediately you see that married filing jointly or married filing separately are the choices that she would have. That nothing changes, what filing status should Jane use next year? Well, this one's a little more involved. So we start at the top. Were you married on the last day of the year? The answer is no. Did your spouse die during the year? The answer is no. And then do all the following apply? So you got 4 bullets. The first 3 bullets do apply, but the last one, your child or stepchild who was your dependent or could have been your dependent lived in your home all year. And then look in the parentheses, it says a foster child or grandchild does not meet the test. So you have to answer no because all 4 of those bullets did not apply. So we move on to the last box at the bottom, box number 8. Do both of the following apply? You paid more than half the cost of keeping up your home for the required period of time. Yes, that does apply. The second bullet, however, you have a qualifying person for head of household as defined in the accompanying charts. Yes, that does apply as well. And that's really the key. You have a qualifying person for head of household as defined in the accompanying charts. So here you have to leave actually the filing status decision tree and you have to go to the qualifying child, qualifying relative charts, and you have to use those decision trees to establish that bullet number 2 also applies. Since it does, that means head of household is the filing status that she would use for the following year.